And how are you?
I'm good, Angel. How are you?
I'm good. Well, nice to have a chance to talk to you about some of the market actions recently. I know your expertise is in metal and gold, silver, and other types of metals. So, would you like to kind of introduce yourself a little bit to our audience?
Yeah, it's been a while, but yeah. So my background is, I work in the financial services industry within the defense contractor business. So I'm around different aspects of finance, and my degree's in economics, so I follow this stuff pretty closely. As you know, you and I talk about markets and trading and all those different things quite frequently. But metals definitely are my interest. Central banks and the insanity they're
Hmm.
ensuing on the world is causing a lot of problems, and
Hmm.
uh, trying to keep it together, and whether it's them cutting interest rates to zero and real rates are negative, we need to educate our listeners on the outcomes of the metals market.
Hmm. So let's maybe break it down a little bit for everyone, in terms of technicals and what's happening in the macroeconomics. So maybe let's go to the macro side of things. Why should people pay attention to gold? Why is this something that everyone's talking about? Why are there so many gold bugs?
Yeah, and it's interesting. I'm on the younger side at 32, and most people don't know much about gold. Um, the people who do know about it are generally, it's hereditary almost, if you will. It's kind of passed down through families and whatnot. But most people don't understand the way the market works. There's only a few people who really understand how gold works, and like JP Morgan said is, you know, gold is money and everything else is debt, or something along those lines. But
Mhm.
macro right now is all these central banks are printing currency around the world, and you don't see crazy inflation yet because they're all printing in unison and cutting rates at the same time. So it's just a race to the bottom. And real rates in the US are going negative, and around the world it ranges from 13 to 17 trillion dollars in negative yielding bonds. So where else would you put your money? Uh, why would you take a gamble in owning a government bond at this point when inflation is most likely going to come up in the future with all this printing? And if you look at the inflation expectations over even the last few weeks, they've risen quite a bit. So it's for longer terms. Why would you own bonds when you know that you're not going to make any money out of that because they're going to print so much, inflation's going to come in, you're going to lose in real terms the value of a bond. You may
Mhm.
get it nominally, but when the maturity on that bond comes due, you're going to have, adjusted for inflation, much less than you would of just owning gold. If you owned gold, gold is just gold.
Yeah, and people are talking about limited supply of gold, and gold's been around for 5,000 years. It's always been, some level of currency and some level of backing up the economic systems in a lot of parts of the world throughout history. So that being said, why is it relevant right now? I mean, there are so many things to invest in, right? Real estate, stock market, uh, just anything under the sun. So, tell us a little bit about why gold is, becoming something that's more substantial for people.
If you look around the world, the world central banks have been accumulating gold at a record pace the last several years, and I believe they're accumulating it at records not seen in 50 years. So, if I'm an emerging market country and I have a lot of my debt in dollars and denominated in dollars, I'm going to
Mhm.
want a currency that I can hold and know it won't be devalued. So as an emerging market, I would like to diversify my holdings into gold, for example, because we know the US is just going to keep printing. The pretty soon we're going to have our deficit being $1 trillion added to the deficit each day at some point, whenever that is. And I think by 2025, the interest on the debt will be the entire budget. So why wouldn't you own gold, uh, as a hedge against all of that? And emerging markets, they know this. That's why Russia and China, Kazakhstan, Mongolia, all of these countries are buying gold, and they haven't bought it in many years to hedge out these risks. And you should always have 10%, I would say, allocation to it as an insurance bet. You own fire insurance for your house, so you would own financial insurance in gold.
So talking about debts, we know that 70% of the world's debts are denominated by the US dollar. And so how does that affect, the currency market in general, and how, countries become so much more attracted to accumulating gold to bet against? Maybe not the right word to bet against, but to hedge against, the upcoming sort of devaluation of the dollar, or
Well,
the other way around. So, how does gold work in that sense, in terms of debts being denominated in the US dollar?
I would say throughout history, I don't remember the exact number off the top of my head, but I believe it's, many hundreds of currencies that were fiat, and they ultimately all went to zero. And the US dollar, the yen, all of these will end up going to their true intrinsic value of zero at some point. But in terms of hedging that fiat paper price of being devalued, you look at the smartest people in the world, and Ray Dalio, even Mark Mobius, who's not really a gold bug, they're talking about, oh, you should have some exposure to gold. And, if you look at what's happening in the contango of the futures market right now, people want their gold now. They don't want it later because mints are being shut down. You don't know when you're going to get it. So it's kind of hard to hedge your price at some point when you don't know if you're even going to get it. So this panic with the coronavirus is definitely something that spooked the gold market. And, like people like to say, the CRIMEX, which is COMEX, is very much involved in playing around with futures contracts and all of that. So, we live in a digital world. So why not have something that's outside of the banking system where it's your hedge against digital transactions? If you own metals in your home or in a safe deposit box, or, in a vault somewhere else in some other country, it's outside of the system, and it's a great hedge that way.
Yeah, we will definitely have another podcast talking about contango and what's happening with the futures market and the spot price. That will be another topic to really can spend some time discussing. But for now, we want our audience to understand what your take is in terms of getting physical gold, or why gold is important to our everyday portfolio. So I think what is a good way for people to acquire gold now? I think a lot of people come up to me and ask, okay, you're talking about gold, talking about that being part of your investment portfolio, but you can't buy the futures contract easily. There's, a lot of volatility involved. Stock market, there's a gold ETF, but, it's not something substantial enough for them, or, the price is actually kind of high. So what are the alternatives for people? I mean, do they want to go to a place and buy gold coins? I mean, they're not that accessible right now for most people.
Well, I'm a big historian, and if any of our listeners have read Jim Rickards, he's very famous on the alternative media, and he's talked about in his books for many years there was going to be a point where the futures contracts on COMEX and the LBMA, there would be a point where you wouldn't be able to get physical metal at some point because they would not have the amount of metal in their vaults to lease out at a proper allocation. So like what happened in 1968 when the London gold pool collapsed, there wasn't enough metal for the price they were keeping it at, $35 an ounce or something like that. So eventually it got revalued to, I can't remember off the top of my head, but $700-800 or something like that, because eventually the paper collapsed. So they could no longer keep that relationship between paper and physical. And what's happening now, it may not happen like that, but with the coronavirus and that type of thing, it's very hard to get supply and metals shipped to different areas. So in South Africa, it's very difficult for them to ship metal up to London to refine, and then Switzerland, many of their mines and refiners are closed. So that's part of the reason why our listeners or people who are interested in buying metals are going to have a hard time finding it. But from my research lately, there are a few places you still can find it. I would definitely own the physical metal over futures contracts, because in a time like this in insurance, when you really need the metal, what the COMEX does is if you want your metal and they don't have it, they'll settle you out in cash. So they'll use a force majeure clause in the contracts to settle you out in cash, but you won't get your metal. So it's always prudent to have the physical bullion in your possession or in a safe jurisdiction that you trust that you can get to. But in terms of acquiring it, there's a few places online that you can find it if it's really important to find it. I mean, there's a place in Texas that I know has some product. And I have heard that if the Royal Canadian Mint is starting to open back up at partial capacity, and I think South Africa may open soon. And then I think in Switzerland, a couple of the refiners are up to maybe 30% capacity. So as we all know, this coronavirus is leaving things up to the imagination, I guess.
Yeah. So as of April 17th, we know some refiners are opening up for business, then maybe we'll have a little bit more luck getting them. But for now, I mean, I'm glad our audience get to know a little bit of who you are and what you're advocating. And, we look forward to kind of talk a little bit more about metals. We got silver, we got palladium, we got a lot more things that we can talk about, and it all relate to our economy, about the stock market and all kinds of markets. So I think it'll be very intriguing topics for everyone to kind of explore from here on.
Yeah, and commodities at our 50-year lows, so I would not be surprised to see them tick up over the next decade.
Yeah. So yeah, thank you for your time, and let's kind of dig into that a little bit more in the future.
Sounds good. Thank you, Angel.
All right, talk to you later.
Bye.